Welcome to Fable Frame Studio, where we transform complex topics into immersive stories for deeper learning. Today we are diving into a mystery case that will reveal the intricacies of inventory accounting. Join Detective Alex and his team as they work to solve the disappearance of a valuable artifact at Mystico Enterprises, unraveling secrets about inventory costs, valuation, and standards along the way. Mystico Enterprises is a respected company known for crafting, storing, and selling valuable artifacts to collectors and institutions worldwide. Recently, however, something unexpected occurred. An artifact has gone missing. This piece was intended for a major client, a museum, and its absence threatens to damage Mystico's relationship with this valued partner. Detective Alex and his assistant Sam have been called in to investigate. As the investigation begins, Oliver, Mystico's owner, explains their storage system. "We have two warehouses," he says. "One is for items valued below $1,000, and for anything above that, we use a separate, more secure facility. This threshold helps us determine where each item is stored based on its value." Sophia, Mystico's CFO, stands by, visibly anxious, as Detective Alex and Sam take in the details, preparing to uncover the truth behind the missing artifact. Detective Alex wanted to get a clear understanding of how Mystico's inventory was organized. The missing artifact, valued below the $1,000 threshold, had been stored in the first warehouse, one designated for items of lesser value. As Alex and Sam walked through the storage area, Sam observed that the warehouse was divided into 3 distinct sections. Sophia explained, each section represents a different category of inventory: items ready for sale, items currently in production, and raw materials used in the manufacturing process. "We've designed it this way to keep our operations efficient and organized." Detective Alex took in the layout, noting how each section had its own purpose, ensuring that Mystico's valuable artifacts, production items, and materials were systematically managed. Detective Alex and Sam examined the cost breakdown of the stolen artifact to understand its recorded value. Sophia began, "Let's go over the components that make up its inventory cost. First, we have the cost of purchase. The purchase price was $500, with an additional $50 for shipping, $75 for import duties, and $25 in unrecoverable taxes. Altogether, that brings the total cost of purchase to $650. Hey," she continued. "Then we add the cost of conversion. This includes $250 for direct labor and $100 for allocated manufacturing overhead, making the total conversion cost $350. Sophia concluded, "Adding everything up, we reach a total inventory cost of exactly $1,000. Detective Alex looked thoughtful and asked, "What about storage costs or the delivery costs to the museum? Shouldn't those be included?" Sophia shook her head, explaining, "Storage costs and delivery costs to customers are not part of the cost of the inventory." Detective Alex noted this distinction, realizing every detail was critical to understanding the artifact's true value. As Detective Alex examines the value of the missing artifact, he notices something unusual. He turns to Oliver, saying, "Interesting. I did a little research before arriving, and it turns out the missing artifact is valued at around $3,000. So, Oliver, why wasn't it kept in the secure warehouse?" Oliver hesitates, glancing away as Detective Alex's question lingers, creating a tense moment. Detective Alex and Sam sit down with Sophia, Mystico's CFO, as she clarifies the inventory cost measurement. Sophia explains, "Inventory is valued at the lower of cost and net realizable value. This means it's recorded at whichever is less, the original cost or the amount we'd receive if sold today, minus any selling costs." She continues, "Net realizable value represents the estimated selling price in the ordinary course of business, minus any completion or selling expenses." Sophia points to the figures for the stolen artifact and explains, "The artifact's cost was $1,000, while its net realizable value was $3,000. According to the valuation rule, it was recorded at $1,000, since we always use the lower of cost and net realizable value." Detective Alex acknowledges this, understanding why the artifact was stored in the less secure warehouse. Detective Alex is approached by Sam, who has just returned from inspecting the secure warehouse. Sam reports, "Detective, I found an object identical to the stolen artifact in the more secure warehouse. It's strange. Why would they keep one artifact in the higher security area and leave the other in the less secure one? Detective Alex's eyes narrow, sensing that something doesn't add up. Detective Alex confronts Sophia, his suspicion piqued after Sam's discovery of the identical artifact in the secure warehouse. Sophia, we found an identical artifact stored in your high-security warehouse. Why would one be there, and the other in a standard facility? Sophia remains composed, responding, Detective inventory valuation follows specific methods. There are two main approaches, FIFO, first in, first out, and weighted average. However, once a method is chosen, it must be used consistently. Here at Mystico, we apply the FIFO method across all inventory. She explains, this consistent approach dictates how we track, value, and store items. Using FIFO, Sophia explains, we received two rare artifacts, one at $1,000 and another at $1,500. Under FIFO, the first sold would be valued at $1,000. She looks at the logs. The stolen rare artifact was certainly the oldest, otherwise it would have been stored in the other warehouse with enhanced security. Sam explains the weighted average method to Detective Alex. If Mystico applied this method, the cost of the rare artifacts would be averaged. For instance, with one item at $1,000 and another at $1,500, both would be valued at $1,250. He notes, had Mystico used this method, the artifacts would have met the threshold for storage in the more secure warehouse, which might have prevented the theft. Detective Alex pauses, piecing together the details. Sophia, he asks, was the artifact's cost right at the threshold for this less secure facility? Is there any chance another cost could have pushed it over the limit, requiring it to be stored in the high-security warehouse? Sophia considers this and then responds thoughtfully. Actually, yes. This artifact was purchased with loan funds, so the interest expense should have been added to its valuation. That interest cost would have raised its recorded value, placing it securely over the threshold. At this point, Sam suggests maybe we should check the general ledger to see if there's any record of the interest capitalization. As they review the entries, Sophia spots an unusual adjustment, an entry reversing the interest capitalization and expensing the interest instead. She stares at the entry, her suspicion mounting, knowing this manipulation altered the artifact's recorded value and, ultimately, its storage location. Detective Alex reviews the ledger, then remarks, all right, whoever made that entry definitely had accounting knowledge. But I'm still trying to understand, why was the borrowing cost supposed to be capitalized rather than expensed? Sophia nods and clarifies, we follow IFRS standards here. Specifically, IFRS IAS 23 requires the capitalization of borrowing costs when they're directly attributable to the acquisition of assets, like this artifact. That's the rule for IFRS. She continues, now, if our framework were ASPE instead, we'd look to Section 3031, which allows a choice. Under ASPE, we could either capitalize or expense borrowing costs. But with IFRS, capitalization is mandatory in cases like this. Detective Alex listens intently, understanding now why the manipulation of borrowing costs was a crucial detail in this case. Based on the adjusted entry, Detective Alex and his team trace the manipulation back to a senior accountant. When they confront him, he confesses under pressure, admitting, yes, I made the adjustment. The warehouse manager and I planned to sell the artifact to a private collector. We thought altering the records would keep it under the radar. Sophia stands by, visibly shocked as the pieces come together. The senior accountant and the warehouse manager had used their positions to bypass Mystico's protocols, hiding the artifact's true value and attempting to profit from its sale. The senior accountant and the warehouse manager are arrested, their scheme thwarted. Oliver, Mystico's owner, expresses deep gratitude to Detective Alex, Sam, and Sophia. Thank you all for uncovering the truth and protecting my business, he says, shaking their hands. Detective Alex acknowledges Sophia, saying, this case wouldn't have been solved without your accounting expertise, Sophia. Your knowledge of the standards was key to seeing through the manipulation. Sophia smiles, and the team shares a moment of relief, knowing they've protected Mystico's legacy and upheld the integrity of its operations.